So we're back here on the Duncan Duo Show. If you're someone that is thinking about buying your first home, you're renting right now, or you haven't owned a home in a while, or you have a friend or family member, maybe it's your children, maybe it's your brother, your cousin, whatever it is. If you have somebody that's thinking about buying the first home, listen up, because we've got some great tips for you in today's market to help a first-time home buyer succeed. You're likely to make some mistakes as a first-time home buyer. First time you do anything, you're going to make some mistakes. So we want to help you avoid some of those crucial mistakes, and help you make the right call with buying your first home. The very first thing to do that I think is important, not just the article talks about shopping around for a mortgage, which I think is great, but it's not just shopping around for a mortgage, it's shopping around for the mortgage company and the loan officer.
Right.
Not all are created equal.
100% agree. I've said many times, especially when you look at the bigger banks, they generally have the poorest reputation. You might find a dynamic mortgage person, that works for that company, but the company itself is broke, or vice versa. You might have a phenomenal mortgage company, but that individual originator isn't that great.
And here's the thing. It's important for you to shop around for rates, but it's also important for you to compare apples to oranges. There are plenty of bait and switch things that happen in the mortgage world where somebody say, oh, I'll get you this interest rate, and you go through the whole process and then they can't get your loan closed, or there's delay after delay after delay, which costs you money, or negotiation with the seller, or in some instances, you lose the house because your lender couldn't execute. So it's not just about the rate. Look at the reviews, be comfortable with the person. You want to find somebody that's got the best, the best rate and terms, that also has the ability to get your loan closed, that you can trust, that's going to be there for you to help you through the process. So it's not just about shopping around for the mortgage, shopping around for the company and the LO too.
The rate can be deceiving sometimes as well, because a ex-lender might say, oh, well, I can give you this interest rate, and it's lower than whoever you have talked to, but what other lender with lower rate may have failed to add was, I'm charging you 1 point origination, 1 point discount to get that lower rate, and the other lender might not be charging that. So you need to compare apples to apples, because a lot of times you're getting charged fees that you don't know about.
Correct.
So you're bringing more to the table than you might be for.
Or we have it happen where someone will pick a loan officer because they said, well, that loan officer gave me a good faith estimate that showed lower taxes and insurance.
Right.
Guess what? That loan officer is not waving a magic wand and getting you lower taxes and insurance. It's simply a bait and switch. It makes their final payment number look better, so you think, oh, I'm going to go there because this payment looks better than this other guy. Look at the principal and interest payment only.
Right.
The mortgage company has zero to do with what you're going to pay in taxes or insurance.
A lender can make a closing cost estimate and a payment look like anything they want it to, but that's not actual. At the end of the day, and I tell everyone this that's shopping, and this is the 100% truth, outside of interest rates and lender fees, everything else is going to be the exact same.
There are government charges, there are title charges, there are things that are going to be the same. So some lenders, however, will juice those numbers and make them look a little bit better to offset for their higher interest rate or higher fees, and the consumer gets tricked. So definitely something really important to pay attention to. Not a lot of people do. People are very bottom line oriented. They don't read the details. They cut right to the chase, look at the payment, and then they say, oh, their payment's lower than yours, only because they lied about taxes.
Here's a big one, too, in our area, and you know this as well, is the homestead exemption and taxes. So, for example, I was running numbers for someone the other day, and it was a smaller purchase, like $125, but the current owner was only paying $143 a year in taxes.
That's going to go up.
It's going to go up. It's probably going to, $1,200, $1,500, $1,800.
And another lender is going to show them, oh, let's make your payment using this 143 number, and then in a year they're going to get hammered. Their payment's going to go up.
Exactly.
And they're going to be calling and complaining, why is my payment going up? Merely because that lender did a terrible job with their escrow reconciliation.
Exactly. Your taxes aren't going to be $12 a month.
No, they're not.
That's not going to happen.
Yeah, so it's going to get reassessed at a higher number, and then that's the new tax basis.
Absolutely.
So, another thing to think about, you're buying your first home. If you're someone that's not used to paying for those repairs and that maintenance, putting less down. A lot of people think you have to have 20% down.
No.
You do not have to have. Look, maybe 6 or 7 years ago when the market was really bad, or probably even longer than that, really. when the market was really bad, it corrected, and there was a limited amount of loan products with lower down payment, and it was still a myth though. There were still low
Right.
down payment loan products. There just weren't as many as there are now. But today, you can buy a house with as little as 0 down if you're a VA or if you're a USDA. For FHA, you're talking in the 3%
3.5,
range for
right.
FHA or conventional. So you don't have to put down the money that you think you do, and holding that money back gives you that nest egg and that protection should an unknown repair pop up, should there be an issue that you got to deal with. But you can certainly put the 20% down. It does get rid of private mortgage insurance,
Right, correct.
which can help. But run the numbers on it. What kind of return are you going to get on that money that you keep out of the mortgage compared to how much you'll save by paying the mortgage down and not having to pay private mortgage insurance? But you can definitely do a lower down payment deal and be in good shape. Now, there are people that will argue, you got to have 20% down and this, that, and the other. To each his own. Every person can make their own financial decisions. But choosing a smaller down payment is an option for first-time home buyers to
Right.
help them get into a house.
And one thing too about the PMI, the private mortgage insurance, that's a space right now too that's got super competitive with different providers out there. So it's not near as bad as it used to be. A lot of people think that if you have a $200,000 loan, your PMI is going to be $200-300.
Yep.
And that's just not the case, especially with higher credit score ranges, 740 and higher. On that $200,000 house, it might be $60-70.
Right.
So it's not bad at all.
Right, and using an online calculator is a good idea, but plugging in actual real numbers for taxes and
Right.
insurance, get an insurance quote, go to the property appraiser website and use their tax estimate calculator and then plug those numbers in.
Right.
Then you're dealing with actual numbers you can prepare for
Exactly.
instead of the fantasy land numbers that you sometimes read online.
Yeah, a lot of those online calculators assume a 20% down payment,
Sure.
and they don't factor taxes and insurance, so you get a inaccurate idea of what your payment's going to be.
Being willing to compromise. You're not going to find everything you want in a home unless you have an unlimited budget. And if you have an unlimited budget, you probably don't need a mortgage, and you're probably not a first-time home buyer.
Right.
So you're going to have to identify your top priorities and then sacrifice on some other ones.
Yeah.
So get the big items, get the things that are most important to you, and then make the other ones not as important. And I think being willing to compromise on price and terms. Depending on the strength of the market, Tampa we've talked about as a stabilizing market. Sarasota, more of a buyer's. You might have more leverage to get a better deal in Sarasota, Manatee than you do in Tampa in some neighborhoods, or vice versa. There are neighborhoods in Tampa that are a buyer's market. There are parts of
Right.
town where it's not as good right now. But nonetheless, being willing to compromise and understand that it's a negotiation between you and the seller, and you've got to find common ground. You're not going to get everything you want with them either.
Right, yeah, I mean, it's one of those deals where you're not always going to get every single thing you want. It's just not realistic.
Yeah, so identify, is it the size, is it the beds and baths, is it a garage? For me, it's the garage. I mean,
Right.
Forget the dining room. I don't need the dining room. I don't even need I could use a bucket and a sink. I don't need some
Right.
cool vanity. But I need an awesome garage. I mean, that's my thing. So I want a garage for my toys. So, but again, to each his own. It could
Right.
be a backyard for the kids. It could be, room for your dogs. It could be, a park close by. It could be commute to work. But identify what those things that really matter to you are most important to you, and then make those the non-negotiables. And then everything else can be more flexible. Now, this last tip that I'm going to give you for first-time home buyers, this applies to every single person buying a house.
Yeah,
This
not
isn't
just first time.
This is not just first-time home buyers, okay? So if you're going to buy a house, okay, let me explain to you what is not going to happen. This is what consumers want. This is especially problematic for millennials that are buying a house, that are used to technology and things like that. Technology is making major advancements in real estate. It's making the process a little bit easier, but houses are man-made. You can't push a button and have magic happen when you're buying a house. You're not ordering something from Uber. You're not getting Uber Eats. You're not you're not buying Amazon Prime. You're buying a house. You're spending a lot of money, and it is a complicated and very, very, very emotional process.
Yes.
It is extremely emotional. You're going to go from the highs of you found the house you wanted, the excitement, the anxiety of making an offer, the disappointment of not getting the offer, the disappointment of having problems in the transaction, doing your best to keep your emotions in check during the process will help your sanity and help you make the right decisions.
Right.
I can't tell you how often people in this process make the wrong decisions because they let their emotions overwhelm them.
Right, yeah, I mean, it's the biggest financial purchase that most people are ever going to make.
And probably the most complicated.
Right, exactly.
I mean, it's the most complex.
Well, and one thing I tell people all the time, and I heard this a long time ago, you're buying a house, not a T-shirt. So there's going to be a lot of stuff that could go
That's
wrong.
That's a funny one. I like that.
Right.
So. I think you're buying a house, you're not ordering food from Amazon Prime. I think that's what people's expectation is.
Right.
Well, can I just click a button and make the offer? You know, no, not yet. It just isn't there yet. You got to fill out a contract. You got to do some paperwork, and well, I just want to go. It's 12:30. Can I go there at 1 o'clock? No, there's actually people that live there.
Right.
Like they have kids. We have to set an appointment. You can't just show up. And so I think the tough part is, as a society, we've improved the customer service and the technology and the process for buying so many other things. It's gotten a little bit better with real estate, but it just first time home buyers run into this all the time because they expect, oh well, I bought a car online, and I had it shipped to me. I'm going to do the same thing with a house. Well, you can, but you're going to have to go and sign some paperwork and go through some steps, and you're going to have to put up some money, and so it's more complicated than people expect, and it is so emotional. Right. It is so emotional. You have to keep your emotions in check.
It's one of those things that's easier said than done, but it's very important to trust the professionals that you're working with.
Yes.
Do your best to trust your agent. Do your best to trust your loan officer because they've been through it. They know what they're doing.
Don't make emotional decisions. Make factual decisions. Oh, I don't want the house because it's got it's got this thing wrong with it. Well, how much is that going to cost to fix?
Right.
Oh, $500. Well, guess what? If you decide to pass on this house and go to another one, it's going to cost you more than that because you're going to have an inspection and appraisal.
Right.
I mean, so often people cancel deals for dumb little emotional things that make zero financial sense.
Right.
Think less emotionally is the best advice I could give you, and don't let your emotional highs and lows kind of ruin the transaction of the process. Kind of go into it expecting it to be emotional and drama filled, because it's going to be. And you're dealing with a lot of people. You're dealing with the seller. You're dealing with agents on both sides. You're dealing with a loan officer, title company, all with different personalities. And unfortunately, there just isn't a way to make it super easy, simple, and push a button.
Right, and I think a lot of times too, it's better for the home buyer. Don't talk to your friends and your coworkers because they're all going to give you different advice.
Honestly, most of them don't know what the hell they're doing.
Exactly, and it's just going to confuse you as well.
Look at your source.
Right.
I mean, I can't tell you how many times somebody comes to me and says, well, the so-and-so said this. Is that person on a home? No, they don't. They got foreclosed on a couple years ago. Yeah, it sounds like they're the person you can take the best real estate advice from. So consider your source for your real estate advice. Yep. All right, we're going to be back with the last segment here. When we aren't on air, make sure to follow all of our socials at The Duncan Duo, Twitter, Instagram, Facebook, YouTube, pretty much everywhere. And we'll be back here.